Our top story, the Indian economy has bottomed out and very soon we will witness a wild recovery. That's the reassurance coming from the Vice Chairman of the NITI Aayog, Rajiv Kumar. In an exclusive conversation with CNBC Tv18 Shereen Bhan, Rajiv Kumar said that a fiscal stimulus package will help a lending hand to recovery. Shereen Bhan started by asking him for the prognosis of what has gone wrong and is likely to get worse before it starts getting better. Hear out what he had to say.
But what's gone wrong has been evident for the last, I would say, at least 5 years. Because I think this government inherited an economy which is already on the, on the down, on the downward slide. Because the 2 years of last UPA, where you had seen already the economy is beginning to slide down. Yeah. And you could have drawn a line underneath it in 2014 itself, by, let's say, for example, writing off all the NPAs or recapitalizing the banks at that time. Yeah. You didn't do that, so this problem has continued and festered. But I think the prognosis is that in July we probably have bottomed out, and the economy is now on the upswing, though a mild one.
What is giving you the confidence to say that we may have bottomed out and that we're on the upswing? Because if we take a look at the latest data, and this is of course government data, GDP at a 13-quarter low, GVA coming in at 5.6%. Yes, if you look at some high-frequency data, auto sales, for instance, encouraging, but credit growth continues to look anemic. In fact, there's been no improvement. Private investment, no improvement. Sector by sector, auto doing well, but if you look at power, for instance, not particularly. Utilization rates not hitting over 70% across industries at this point in time. So what is giving you the confidence to suggest that this is an economy that's bottomed out?
Because this is some data that you put out yesterday yourself. The PMI for manufacturing has risen from 47 to 51 from July to August. The PMI for services has increased from 47 to about 49.4. You got auto sales, as you say, already rising quite smartly. But most importantly, which I use always as a very good leading indicator, commercial vehicle sales has increased very smartly from about 6.14 lakhs in 2014-15 to 7.14. More importantly, I think, by the way, you got to use high frequency data now, because to use one quarter and then the last quarter and then say that, look, that is how it's going to be in the future, I don't think right. The last quarter particularly was one where you got the huge amount of GST destocking going on. So that should not be used to say that the economy is in tailspin, etc., etc. The other issue is that you've got exports now which have not yet reached the peak of 314 billion, but nonetheless rising consistently for the last 14-15 months. And there was something that you just mentioned, which I, about the credit offtake. We are constantly looking only at the public sector bank credit offtake. Look at the private
credit. I agree with you.
No, the private sector banks, HDFCs and the ICICI of the world, very smart credit offtake. And then the corporate bond market, huge offtake. And now if you look at again the recent data, there is a very strong pipeline of IPOs being lined up there. Now IPOs don't get lined up in an economy which is in a tailspin or which is going sort of to bust, or which is they don't do that. That doesn't happen. Civil aviation up by 16.5%. Now these guys are not just flying around for the heck of it, are they? They're doing it because there is economic sense in it.
Right. So given what you've just painted, the fact that you believe that we're on the path of a recovery, albeit in your own words, a mild one, is there a need for a stimulus at this point at all?
Yes.
There is?
Yes.
Okay, why?
To just give a helping hand to that recovery, and to make the investment climate more robust and stronger, and to give signal to the domestic investor. And here I must just sort of take one step backward. Abroad, in other countries, the India story remains very bullish. Reflected in $256 billion worth of FDI, not portfolio, coming in the last 3.5 years, right? So why is this disjunction, this disconnect between the foreign story
and the domestic investor?
The domestic has to be reconciled now. And the way to do it is to convey the government's clear intention that we want investment to pick up, and we will therefore do capital investment, productivity enhancing investment, which will crowd in domestic investment.
Most ministers in the government, even today, saying that a call has not yet been taken and a call will be taken on whether a stimulus is needed at this point or not. If that were to mean higher government spending, if that were to mean deviating from the path of fiscal consolidation, you're saying you're okay with that?
I am perfectly okay with that because I define fiscal consolidation very differently. And I had said this to the encassing committee. Unfortunately, they did not listen to it because of whatever reason. I had said that fiscal consolidation means getting revenue deficit down to zero and not this fiscal deficit number which has been plugged out of the Maastricht Treaty or whatever else, etc. And the government should always have ammunition to behave in a counter-cyclical manner.
So do you believe that is this the right time for the government to use the ammunition is the question? I guess that's what the debate is currently within the government.
I think so. Having taken the two most amazing, incredible reforms to clean up this economy, to get the economy on a formal path, to have a more, as Jensen has written today, to get an economy which is cleaner, transparent, more sustainable. I mean, of course, the demonetization and the GST. When else would you do this? I mean, even the FRB...
So Jensen's father says that demonetization is an unmitigated disaster.
I think it's completely wrong, because I've argued it so forcefully in the past that I've always said that even if you grant the fact that all the black money is now in the banks, it is there in the banks, it's not sloshing around and creating sort of unnecessary upward inflationary under pressure and being used for speculative reasons and for hoarding and all of that. So would he have all that cash, splurging around and doing all the wrong things, or would he have a cleaner and and more formalized economy? I think demonetization.
So your argument is that we're paying the price for moving to formalization, and hence even if we have to lose a couple of quarters and deal with a slower rate of growth, you're okay with that because you believe in the long term it will add to formalization of the economy.
Not such a long term, Shereen, in the very medium term, and that it will come back. But also the fact that you don't need to pay a price if you are clever enough to use your ammunition when you need to do so.
Drew up that list as far as strategic disinvestments, etc. concerned. We still haven't seen a single one go through. Do you feel that...
I'm aware of that.
Yeah.
I'm aware of that. I have now just started my task of pushing whoever is needed to be pushed to get that through. I mean, after all, we've done our bit and submitted a list of 23 enterprises, and I think that should happen, given the fact that the market is also, despite this week, is still very good. So I assure you, though, that you will see action on that in this next 3 months.
In the next 3 months,
absolutely.
1 or 2 or more?
Or more. I should say more. Absolutely. At least half a dozen, I would hope.
Half a dozen in the next 3 months? Or this financial year?
We have submitted a list of 23.
Yeah, I know, but nothing's happened so far on that list of 23. So you're saying half a dozen over the next 3 months?
Well, that should happen. I'm not saying it will. Let me say that's my wish list.
I know that the clamour has been building for a significant rate cut. A consensus on the street is that the MPC will perhaps do another status quo. What is it that you hope for? What would be the wish list as far as the rate cut is concerned?
Shereen, I've actually gone off the interest rate debate completely. I tell you why, which is simply that it's not in our hands. MPC would do whatever MPC would do, and a 6% repo rate, is what it is. But I find, and I just got this done, that the lending rates are way up there, 11 to 18%. Now I don't see why our banking sector needs a 5 to 12% margin for lending, money to the borrowers at a time when it is flush with liquidity. So I am much keener on focusing on how to bring down the lending rate rather than keep talking about the repo rate or which I have no hold on. Now the other one I can at least do something about, I think, which is, to talk to the banks and get the Department of Financial Statistics to talk to them as to why can't the efficiencies be improved and why can't those rates be coming down. So I think it's much better to talk about, in classic parlance, about the transmission rather than about the repo rate.
Okay,
but one statement there is that I just been pointing out that the Asian practice and tradition is for the central bank and the finance ministry to work together. And the Anglo-American one seems to be this autonomy and independence and almost conflictual. I would leave it to the central bank to decide whether they want to be Asian or American.